Good morning. Welcome to TradingTheNumbers.com. This is JP. This video is to provide an insight into what happens at TradingTheNumbers.com. We believe in less is more. We provide initial analysis and give detailed analysis on support resistance levels throughout the day, predominantly on ES. We have a 2-week trial, so if you like this video, please click on this. We're welcome to see you so you can see some of this work in real-time action. The way it starts is prior to the start of the regular trading sessions, Yahoo will post a chart of what has happened previously and what is likely to happen during the day. So in this case, on the weekend, Yahoo had posted this chart showing what the Elliott wave pattern looked like, where the ideal support resistance levels were, what was the most conservative targets, and what the pattern looked like. So in this case, there's an ending diagonal pattern that was shaping up to. There were these channel lines that was providing a support, and this channel line was providing resistance to the upside. Various rising lower parallel lines and potential support lines and ideal target lines have been identified. This is an SPX chart. An ES chart had also been posted showing predominantly that the initial area of target was the 890 to 895 level. There was a further higher target in the 900 region, and the SPX chart also showed an area of above 910. This specific pattern would be suspect, and above 922 the ending diagonal pattern would be invalid, and there would be a higher likely that this pattern was something else. We go into the chart in relation to Monday. What we see is a gap above the close and also a gap above the highs of the previous day. Opened at where this white line is, hovered there for 10 minutes and took off from there to the upside, giving a path into what Yahoo had identified. They hit the first level of 895 and went down a little bit from a correction aspect into the 890 level, found that as support and established a launch from there into the second level target of 905. So it's a pretty good start to the week, almost 25 points as a result of that market outlook that had been provided by Yahoo. If you go back into the site, what we see is here is the market outlook that is made for the day. Is given a little synopsis on the market, and here's the chart that I showed you in detail that he had provided. What also happens is within chat is daily market action commentary that he provides where the current resistance is, where the support is, whether that support is working, where to watch out from. Classic example over here is at 952 in a marginal poke. It had reached the first level. It could make a larger reaction from there, and the view was to tighten stops, especially because we were moving into a news window as well. And what happened there is it made a new high. It reacted to the news. There's a big spike up. The stops protected move to the downside, but more importantly, it allowed for higher profits to the upside. You go to the last page here. Again, it shows that the upper trend line had been hit. The ABC x ABC worked out, and it kept the site from being too bearish. So from there, if we move into Tuesday, what we see is you're expecting some sort of a correction and digestion of the move to the upside, which is shown in the charts. Here we've gone into a 1 by 1. Here's the wave 5 ending diagonal. It's wrong about here. Where are the supports? So potentially it's coming to a 5 or a C. It may go a little bit higher, and then it may just consolidate here or do something different. So if you go into the charts, which is exactly what we see here. Here it failed to take the high off the previous day, consolidated about the open initially and failed to make any new highs, and as a result it went down. What is key here is it went into the consolidation area that it created following the test of the first target of the previous day, and consolidated a little bit more there, ABC, and from there it on the second test, holding the second test here, went up into the close to close very near the highs of the day, but also above the opening levels as well. If we look at the third day, we see again it looked overbought here. We can see that. So there was a small move up into Globex. There's a gap open, and it was key here that the moving averages were racing to the upside, but the stochastics and the RSI was already overbought, needed some sort of correction, came down to test the previous day's high, the previous day's close, and the previous day's open. This test of support held, and it went back to test the open, went through it, came down a little bit, and again went and closed above the open. We have another day where again it's fairly close to an overbought level. The open, significant open at 925, again at the opening levels held, and as a result of that it came down. The 15 minute was overbought as well, and we can see it come down to test the highs and the close, and then the open of the previous day and the lows of the previous day, by which time it had worked off the overbought levels that it had, and it was ready both from the point of the 5 minute but also from the point of the 15 minute to try and make a move to the upside, either in the form of a correction or in the form of a resurrection of the impulse. If we go into the intraday commentary, we see Tuesday gave quite a few comments here, identification of some trend lines, but more importantly, if you go to the end of the page, it says that the drop was non-impulsive, suggesting another high bearing any major bad news or massive gap down. So we identified wasn't a high yet, it was looking like it wanted to make some more highs. Go into them. The first we can see again here, it's open at 912, 909, and various market commentary is provided. Again on Thursday we show that support was never really lost. It's opened above 920, which are the levels we were looking for, above which the ending diagonal would be incorrect, and shows ending diagonal not correct in its current form above 923 SPX. So from here we'd be looking for higher values as well, not necessarily for that specific day, but it immediately opened up from a pattern aspect. We go to the last of this day. Bears need to lose the 900 level without recovery to have a chance, but not like this. So basically we're still not impressed with the market action. Whilst it was okay from a day trading aspect, from a swing trading aspect, it did not look like one could say that the high was in. Over here again, what we see is at the close of the day, whilst the 5 minutes had gone up to significant levels, it was approaching overbought levels, but there was a significant fuel left in the tank for the 15 minute, which is exactly what happened on that Friday. With the benefit of whatever catalyst it had, it gapped up, it remained up for 20 minutes, could not go much further, and as a result of that came down to try and fill the gap. The failure to fill the gap allowed the 5 minute to be fairly unwind its overbought and have the 50 line support the RSI, and from there it started another move to test the highs, which it did so into the close of the day and into the close of the week. What we also see in here, we show the negative reaction NQ filling the gap. So NQ was leading to the downside, although the internals remained strong, and although NQ was tired, it showed basically the opening levels where it was weak, showing every single levels where potentially it could go wherever it wanted to. And if we go to the last level page, it was testing where it needed to go. NQ needs under 90, ES under 22ish for lower, and here again skeptical of a spectacular decline today with internals still strong. Market still promises to swing wildly into next week. Even if net sideways, it could be unpredictable for the next couple of days. So there was significant amount of feedback that was provided. We can also see that within the charts that were provided. Here is a chart for a move going into the Friday. It shows the 3 or the 5, and this was the 4, and where it could potentially go. But because it had moved in that level of the ending diagonal, we're now looking for better alternatives must now be found once the large ending diagonal becomes overstretched. Now watching if ES can hold support, as that can lead to another high into the 940 area. I hope you've enjoyed this video. If